Hey there, Michael Santonato here, and I want to tell you about a great little case study, just a short video telling you about a client that I worked with recently. Wonderful client, husband and wife, real estate investors, very high net worth, lots of properties. They got a sixplex, a duplex, and a couple of single family homes. So high net worth, lots of cash flow coming in, pretty set, pretty solid. And only one of them works. The other one doesn't have to work, just looks after the properties. So, pretty well set, right? And you'd think, they're on top of their game. They've got everything handled. But actually, they do have a number of kids, and they had no life insurance. Now, the funny thing is they thought there was no need for life insurance. So I said, okay, well, you're in your 50s and 60s. And so what is the plan when one of you passes, right? Which is probably going to happen one day, whether in the next 5, 10, 20, 30, 40 years. What's the plan? And they said, well, we'll sell, the house and we'll sell a house or a property. And then we'll use those proceeds to pay for the funeral, the taxes on death and the passing and, all those expenses and all those things. And I said, well, why do that? Why not just take out a small little life insurance policy? Something like 20 grand or 50 grand, because the way you currently have it set, just so you know, to liquidate with one of those properties will take probably a few months. And you're in the real estate market, so you know that when someone sells due to urgency and need, they lose profit. It cuts into their profit, right? As soon as the buyer finds out why you're selling, they know they got you because emotionally you're strapped. It would be much better and simpler and easier to have a small little life insurance policy, $50,000 to cover the funeral and the taxes. Because when the person passes and the other parent passes as well, the houses will go to the children, and the only one that is tax exempt is the principal residence. All the other properties will get hit with taxes when passed down to the kids. And then there's also the matter of, the funeral, which is 20 grand. 15, maybe even 10 grand. But why liquidate a good cash flowing property? This is key. Why liquidate a good cash flowing property? Okay, just to settle an estate, just to pay for a funeral. $10,000, $20,000 to pay for a funeral. In the GTA, 20,000 is kind of the average, right? Why liquidate a good asset, a good cash flowing property, just to pay some taxes, just to pay for a funeral? It doesn't make any sense. Instead, get a small little life insurance policy, $1,000 a year, not even $100 a month, and cover your assets, your taxes, the funeral, and keep the cash flowing asset. That's the best thing. So you never know what a financial advisor is going to do for you. You never know what somebody with, an outside perspective, such as myself, can do for you or can do for someone. So definitely, I just strongly believe a financial advisor is something that everybody should have. Like you have a doctor, you have a dentist, you have a lawyer, you definitely should have a financial advisor in your Rolodex, in your tool chest, in your resource, in your close network, in your relationship to help you with things. So thankfully, this family, this mother, father, husband, wife team, they did the right thing, got the insurance policy, and now they're set for the next 20, 25 years. And no need to liquidate the asset, and they're totally taken care of. So if you want some help, you want a fresh perspective, a fresh set of eyes on your financial situation, so send us a message, comment on this video, comment right below here, and we'll get in touch with you, or use our website, and you can book a call for free, complimentary, at the link below. Thanks so much.